Welcome to Trading Lounge and the US indices. We'll be looking at the NASDAQ and the S&P. So for the NASDAQ, starting with the NASDAQ today, we're looking at this particular correction here from wave 1. We're looking for an A wave, a B wave and a C wave. This C wave here will be in 5 waves, and we can see them here as 1 and 2 and 3 and 4 and 5 here. And I'll just bring this into the 1 hour chart here where we've been working. So our target area originally was down at this point here, and we're looking at from wave B here as 1 and 2 and 3 and 4 and down for 5 here. So if I can just remove that for a moment. So that's pretty much where we are, even though we've got this little trend pushing up here. It still looks as if it's just a corrective wave. So I guess that I would, it's always nice to know where you're wrong, when you're wrong. If I was wrong, then the 7,100 here would have to become a nice tested support. And a tested support, when it comes up to a level, is the arrival, the reaction, which it's reacting now from, so it could be bullish. It would still have to push up above the level, and then it would normally run out of steam and fold back in 3 waves, and then it would find support, build support on there. So there's a long way to go. So we could even use this here to put this above here, but it's not so much. We still have to wait for the first high above the level. So even if there was a that to me is the reaction there, so we'd still need that first high above the level there for this to come into play here as a trigger for the long side. So that's how you can deal with that. On the short side here, we can pretty much look to move into any weakness. Just give me a second. Platform's just readjusting, as it does at 8 o'clock. So I suppose we could, there's different ways of getting in here, I guess. I mean, that's pretty much the support line here. So what we could see here is, let's sort of just imagine all of this coming down through to here. It would bounce off this trend line, and then it would bounce off it like this, and it eventually moves through it like this. So there's many ways to get into the market. It just depends on how you want to do it. But I wouldn't expect it to move very far, because the extension is in wave 3, so that means that wave 1 here and wave 5 will be roughly the same length. Sometimes if the wave 4 is too high and the wave 5 is not long enough, then what we would do, like in this case here, pretty much grabbing that, just moving it over here, it does make us, it does bring us down to the level here anyway. The other way to do this, there's a few different ways to do it, but the other way is getting the distance of wave 3 here and getting the 61.8%, because they've all got some sort of relationship in one way or another, and you can kind of just sort of drill into these or just move that. So that brings us down a little bit further. And the other way, if I just delete that, other way is to take this low here, this high here, and then project it down to the 61.8% mark here. So there's a range of things that we can project into this particular space here, but and it's good, you know, it's good to get some sort of idea about that. But at the end of the day, what we're actually looking for is we want to be able to count the 1, 2, 3, 4 and 5. They're the 5 waves that we want to count down into this space here. So in a nutshell, this is where we'd be wrong if there was support found on there. I mean, the other side to this too is that the rally from top of wave 2 to low of wave 3 is a 38.2% mark. So we're kind of already there anyway, you know. So if it found support on that, I know that discount would be wrong, and then we would have to look at squeezing it in some other way and having a look at what this move in here. But I know this is 1 and 2 and 3 and 4 and 5 to here, so it's just best I'll just leave it like this for the time being, but good to know when you're wrong. So I'll just save that, and then we'll have a look at the S&P. Now, always starting from the big picture here. So for the S&P, we've got this bearish count here, which we can't wipe out at the moment. We can't rule out, but it's probably not the case. But I don't want to rule it out just yet in this, and that would leave wave 4 here not completed, and we would need to see 5 waves down through here. The other way in the bullish count is really counting these up here in 5 waves here, pretty much like the NASDAQ, but slightly different. The NASDAQ has got a different count within this little structure here, making it different. So we've got the bearish count and we've got the bullish count. So this is the bullish count here, looking at wave 4 here and counting this as 1 and 2 and 3 and 4 and 5 here for this wave 1. I've come out 1 degree on this, so that's why there's a bit of a change, but labeling's pretty much the same. So in this case here, we're looking for an A wave here, B wave here, and then 1 and 2 and 3 and 4 and down for 5 here. So the same as the NASDAQ in that regard. And if I just cut through to the 1 hour chart here, it's the same. This is how I've had it counted before. Still, this is wave 1 here, an A wave here, B wave here, and C wave here. I've just come out 1 more degree, that's all. So I will. Last time we spoke, we were looking at either being long above here or being short below here. So we don't need this one here at the moment. So I'll just move that, but we can put this over here to be long on this level here, and this would be group 1 here. So group 1 of 700, group 1 is simply 10, 20 and 30, or 1, 2 and 3 as I call it, because I like single numbers and reducing everything down into simplicity. And I know that if we found support on top of group 1, on top of the 3, on top of the 30 there, then we need to be long from that point. Okay, if you shorted here, hopefully you would have had enough grey cells to take profit here, but if you haven't, then we need to bring the stop down to this area through here. So I'm just going to save that and go to the tick chart. So basically the count that we have now is the same as this, but it's just that we've got a blue wave A and a blue wave B and a blue wave C and an orange wave 2 here. So just going into the tick chart here. Okay, I'm just going to come out a bit further, just get the bigger picture here. So from the top here, we've got the A wave, the B wave, and then we've got wave 1, wave 2. We're short here. Hopefully that you've taken some profit there at the 2700. And now we're in wave 4 here. So from this top here down to here, that brings us into the 38.2% retracement level through here. So we're really trading at the 50 here. So any move above this here, then we're definitely moving to the upside for whatever reasons. Okay, so the Elliott wave helps us with the direction. The trading levels here help us with support and resistance. So between 700 and 800 here, we just use the Fibonacci numbers of 1, 2, 3, 5, and 8. So we've got 10, 20, 30, 1, 2, 3, 5, and then we've got 8 here. But with 8 here, we've also got what we call group 2 here, which is 65, 72, and 80. So group 2 here This one, I'm not sure where he's come from. So basically it breaks it up into a grid and steps and support and resistance. So it makes it helpful. So I know that if support is found on top of group 1, the 30 here, then we need to be long from that point. So if you're short here, hopefully that you've taken money off the table here, but if you're still in there, then you need to bring the stop down above that high here, so the red line. And then in a nutshell, we want to be long above this one here because we'd be wrong at that point. Otherwise, we're looking for, I can't draw on this side of the tick chart, but with this correction here, by the way, we've got 5 waves up to this point here, and then an A and a B and a C here for the B wave, and then 1 and 2 and 3 and 4 and 5 for the C wave. So it's all looking quite good here. So we still want to see the move down in terms of 1 and 2 here. So I'd probably need to I want to go to the 20 tick chart there, but I'm not going to do that. It doesn't look like it's completed to the downside just yet. But in terms of shorting, if you want to be on the safe side, the 72 here is, well, 272, 20 is where you can be. So if this becomes the retested resistance or the trend line here, then you can be on the short side from there. And trend lines act as support lines as well. So if we've got a trend, I can't draw on that side of the tick chart, so I've got to come over here. So it's the same thing. So when a market's migrating from one level to another, it will come down, bounce off it, may even have a second bounce off it, then come through, then come back and retest, and you can have your short trade here and 1 point below that one, and if that's breached, then you go from that point. Same with the trend line here as well. The arrival, the reaction, first low below the level, the retest here, and then down again. Sometimes you can actually get 2 retests on a trend line like this, but most of the time it's just 1, but you can get 2, so you need to accommodate that, okay, in your position sizing and your technicals. All right, I'm just going to leave it at that. It's all pretty simple. So in a nutshell, we're looking at Thursday being a bear day and Friday and Monday being the bullish days. And this would also line up too with we're short in the banking sector. So we'll be able to see the lows come in for those guys there as well, and also in the NASDAQ stocks as well. So we've been seeing wave 4 pullbacks in the NASDAQ stocks, and they'll be finished. So we can start our going long campaign next week, or if not on Friday, and start building back into those trades. But we're in a rock and a hard place here in terms of equities. It's not worth shorting for this little period, especially end of day trading. So we'll be back on track on the long side shortly. Alrighty, thanks for tuning in. Appreciate it. Cheers.